even when you're talking from a podcast perspective, anyone who I see who starts podcasts when it comes to trading, I'm always curious where I'm like, what are you going to talk about if you only trade technicals?
Okay, guys. Ciao, guys. This is Mario Di Marco, and welcome back into the SFT podcast here from the FX Summit in Miami, guys. Please welcome back Joe and a new friend, which is Josh. So welcome here. We are ready to hear about you. We talk about a lot of topics during these days, and we are happy to hear your story.
Yeah, awesome, man. Yeah, I'm happy to be here.
Josh, nice to meet you.
Yeah, you too, man.
So we just met here. We're meeting a bunch of different people. We just met Josh. Josh is a trader at TopTier.
Yeah.
Yeah.
I'm a coach for TopTier.
A coach, but you've done a lot of draws from TopTier.
I'm actually not a funded trader with TopTier.
Really?
No, they needed a coach for fundamentals, and nobody knows how to teach fundamentals. So I'm one of the guys that they reach out to.
But I heard that you have a good profile.
Yes. I have my own group where we have our own community, our own coaching, and my own trades that I trade live every day, all 3 sessions, like I was saying earlier. So yeah, we do all of our own trading, specifically with the funded program with TopTier. I'm a coach teaching them fundamentals for the funded traders only.
Yes.
Just basically teaching them how to keep their funded accounts. Don't blow it, don't lose it, stuff like that.
Okay.
I asked because I was browsing around, and I heard a lot of people talking about this prop and the funded program.
Yeah.
Which is quite famous here. You know, we come from Switzerland, and we're discovering what is the most hype here in.
Prop funds at the moment. Definitely.
Do they not have a lot of it where you're from?
No, they do. I think it started in Europe with FTMO.
Yeah, FTM was the first one I ever heard of.
Yeah, that's what I thought.
Me personally, I never did, because I started a long time ago.
Yeah.
Never challenged. But I come from the same field of you, fundamentals, more than technicals. And you say that you are a coach.
Yeah.
You're coaching fundamentals. And
Yes.
what is the most important part in fundamentals?
So one of the funny things.
In teaching fundamentals, because that's the hardest part.
One of the biggest misconceptions of fundamentals is that when people find out that, you trade fundamentals, they think that, well, what about technicals? They end up saying, like, they think when I say fundamentals, that technicals automatically don't matter anymore. What I've come up with, or I've dubbed like my framework, is what I call the FIST framework. FIST as in FIST.
Yes.
So it's fundamentals, intermarket analysis, sentiment analysis, technical analysis. Perfect. Those are the 4 things I use. For me, that's what turns me from a guessing trader into a profitable trader, a consistently profitable trader. And even if I take losses, I now understand why I took those losses.
Yeah.
Because fundamentals tell me all of that. I understand what's driving the currency. I understand what's driving. It doesn't matter. Because one of the other things that I look at this as a myth. I know some people may disagree with me, where they're like, you need to study one pair and understand that one pair. I'm like, I'll trade any currency pair. And then I'll go trade gold tomorrow, and then NASDAQ the next day, and then the UK 100 after that. Yeah. Because fundamentals impact all of them relatively similarly.
Exactly.
Yeah.
Interest rates impact equities the same. Yeah. Interest rates impact currencies the same. As long as you understand where that central bank stands when it comes to a monetary policy. I don't want to use big words and get too lost on your audience here.
Yeah, but this one open you to be more focused in more tools.
Yes.
Just like, I don't know, treasury bonds.
Yep.
For example, most of the traders, especially the beginner, they don't know nothing about the treasury bonds. For example, they don't know about the correlation,
Exactly.
which is really important.
Yep.
In this period. We know that institutional, they're moving through the fixed arrangement, and this is really important.
Yeah.
And safe haven at the moment are the main part of this market, which is choppy for
The
one
Japanese
reason.
yen, the dollar,
Exactly.
the Swiss franc,
Yeah.
yep, gold.
But for example, when it comes for JPY, we all know that is a safe haven asset, is considered a safe haven asset.
Yep.
But at the moment, if you don't know that the Bank of Japan is doing and applying a kind of strategy.
Quantitative easing.
Yeah.
Exactly.
Yep.
So this is a notion that every trader have to know, in my opinion.
Yeah.
That's why fundamentals are so important. And you're right when you say that we don't have to split them.
Yeah.
From
No,
the technical.
I don't believe that you can. The one thing I always say is that technicals is how the market moves. It's visually how you can see it moving. Fundamentals is why it moves.
Yeah.
I want to know the why behind everything. So maybe it was the geek in me that got me into fundamentals. Maybe it's because I always ask why, and I'm always curious. But that curiosity is what helped me to become profitable.
Yeah, maybe at the beginning you can avoid the fundamental part, but then with the time, it's just a question of time, and then you realize, okay, now I need to know why the market is moving like this because I'm not profitable,
And even
I have
then,
to understand why.
I'm willing to bet the only reason people start off and they're like, oh, I can get away with just technicals, isn't because they actually can. It's because no one, either they don't teach it or they tell you just stay away from it. I don't know how it was when you guys first started, but the number one rule I was told, they call it red folder days. Like, stay away from the
Don't
red
trade
folder
them,
days.
yeah.
Stay away from the news. Don't trade the news. They always say, let the market do its thing. It's manipulated, and then the market will continue doing what it was supposed to do. I look at, someone says that to me now, like, you're crazy, man. Like, the fact that there is so much volume and volatility when data comes out or when headlines come out or when news happens and the markets move, that tells me that's what the markets are paying attention to, which means that's what I should be paying attention to.
Yeah, and probably you will find trouble just on lower time frame during this release.
You can, yeah. It depends. There's multiple. It depends. I mean, I'm currently holding a swing trade right now in AUD that I took in the 5-minute time frame, but I'm holding it for 2 weeks. I take swing trades on the lower time frames, and it was because intermarket analysis, where we had good, I mean, depending on the day that this is released, but like 2 weeks ago, we had good data from China. We had interesting data from China, which helped the AUD currency, because the AUD and China are very strong trading partners. It helps the AUD currency. And then inflation came out higher for AUD, and then they just raised rates. I've been holding a trade on AUD JPY for 2.5 weeks, but I took it on the 5-minute time frame. It's just the reasons behind the trade stayed, but the entry and the technicals never changed.
Exactly.
So what got you into fundamentals then, rather than technicals? Because everyone starts and they go to technicals. What got you into fundamentals?
So I started with technicals too. I was struggling FTMO. I tried FTMO like 3 times. Got destroyed. And I just thought that was the way to do it. I was told, like, yo, you should start with funded accounts. Don't do anything on your own. I would actually give someone the inverse advice now, because I think from a psychological perspective, you should know how to manage on your own versus getting into something that gives you set rules and time limits that prop firms give you. Just my personal opinion. But there was a video I had watched online that talked about the correlation that gold has with inflation. And I had never understood the idea behind, and I didn't know that information existed. So the idea that inflation impacts gold and interest rates impact gold made me realize that there's something deeper to looking at fibs and moving averages and indicators. And once I realized that, it was game over. I have my own news terminal. I have a Reuters news terminal. I pay over $30,000 a year for it just so I can get the headlines, economic data, all of that directly to my computer at all times.
News from the first level.
Yeah, exactly.
Because as we know, there are 3 stages of news. The first one, the second one, and the third one, which is the one that normally retail traders
It's filtered.
trade.
It's after the fact. It's all that stuff.
When it comes to manipulation.
Yeah.
The third one, because the news is already expired.
Yep.
That's why we trade the reaction to the news, but we are not trading the result of the news. That's why gold is bullish since long time, because institutional, they're moving in that way. So
don't be scared of the news then. That's basically...
Don't be scared, but try to understand them. And I believe that your program is something really interesting and original, because honestly, I knew few companies, few funded accounts, few prop firm that provide this kind of service. Coaching fundamentals is something that many community are missing right now. In my personal experience, I knew few traders based on more on fundamentals.
I don't know many that I speak to. Once someone finds out that I trade fundamentals, it's like, oh, that's what I'm missing. I'm like, that's what 98% of the people here are missing.
And so, for example, here in FX Summit, when we met each other, I said by myself, oh, finally someone that I can talk more than 10 minutes.
You two are both fundamental. I'm more technical.
Well, there's so much to talk about. Like, even when you're talking from a podcast perspective, anyone who I see who starts podcasts when it comes to trading, I'm always curious where I'm like, what are you going to talk about if you only trade technicals? No, I don't mean any offense to that. I just say like, there's only so many times you can talk about market structure, trends.
It's the same.
Breakouts.
It's the same.
But if you're talking about fundamentals, I can tell you what happened to oil last week because there was an Iran nuclear deal that happened and White House smashed it and oil ended up dropping and then recovered immediately like 2 days ago. I can tell you why that happened. I can tell you about COVID. I can tell you about
Do you
Russia-Ukraine
remember
war,
the
like-
crash during the Evergrande?
Yes.
The
yes, I
boat
do.
that was
That was when I was just
stuck
starting to get into it.
Yeah. In the
Caused a risk
in the
off
channel,
market.
yes.
Yeah.
It's insane. That was insane. I remember a lot of volatility in gold. because
How
of
long you
this.
been trading for?
How long?
Yeah.
Not that long. 3 years.
3 years.
Yeah.
Okay. Okay.
And what
But the fact that I mean, people hear 3 years and they're like, oh, well, I've been trading for 8, but whatever. But like trading 3 sessions every day for the last 2.5 years.
That's
and-
crazy. That's crazy.
And fundamentals. The way that I break it down is like this. If you looked back at 2000 up to 2018, the last 18 years up to 2018, you think about all the things that have happened. You have the dot-com crisis, you have the 9/11, the war on Iraq with the U.S., so the Middle Eastern war. 2008, you have the housing market crash. 2016, you have Brexit.
Yeah.
And then 2012, there was another Russia-Ukraine war. It was 2012 and 2014.
It was 2014, I remember, yes.
There was another
the first one in
Russia-Ukraine war.
Crimea, yes.
Yep. So then you're looking at, and then COVID started 2020. But you look at all of that stuff that's happened, it's taken about 18, 20 years for all of that to transpire.
Yeah.
In fact, if you go to check on a wider time frame, it's
Well,
part of...
If you were trading the last 3 years, fundamentals, and you're paying attention to this stuff, I have COVID, I have the Omicron variant, which caused more lockdowns, and they closed down the borders for that. So that was, if you go look at oil in November 2021, it crashed because they locked down the borders. Europe said that when Omicron was found in South Africa, oil tanked.
yes.
Demand issue, right? So supply and demand, oil drops. But my point is, like, you have COVID, you have the lockdowns, you have China with their zero COVID policy, you have the Russia-Ukraine war, you have, God, I have a whole list of things that happen. World record inflation, the interest rate problem, the monetary stimulus. Like, when you take a look at everything that's happened in the last 3 years, it's 20 years worth of experience that's happened
yeah.
if you're paying attention to the right things.
Yeah.
If you're just looking at technicals, it's the same fib today than it was 15 years ago.
Yeah. Yeah.
So you gain that
It's
experience.
like a block, isn't it? It's a block of the same thing over and over and over again.
You see patterns.
Yeah, let's say that you are able to explain technical stuff using the fundamentals, and you can tell the story of that moment
Yep.
using fundamentals and technicals together.
Yep.
For example, let's make an example. Brexit, long-term correction
Yep.
on GBP USD. Long-term correction. Weekly,
melted.
daily, yes.
But that, like, anyone who ever comes to me and talks about backtesting, because you mentioned backtesting, I don't believe in backtesting if you're just backtesting technicals. You have no idea what happened. You have no context to what the central bank was doing. You don't know what the data was or what was expected if a headline came out. But if I go to Brexit, I can tell you why the pound melted, right? I can tell you what happened to GJ, GBP, USD, what happened there. If I go look at gold on February 23rd, 2021, I can tell you Russia invaded Ukraine. Wednesday night, I remember the exact headline because I was at dinner and I was mad I missed the move. Gold spiked 2,000 pips. Market fear. Gold's a safe haven. We have a lot of fear in the markets. Gold goes super bullish. But at the same time, if you zoom out on gold and you look at that same time frame, November, that was February 2022. The Feds had just started raising rates
in November.
March.
I'm sorry,
2022.
March.
They announced it earlier because they would start doing tapering. But so when you look at from a short-term trade, okay, gold to the upside. But as long as you remember the macro, Feds are raising rates, dollar's still bullish for pretty much all of 2022, which is bearish for gold.
I remember I was trading USD JPY and DXY was flying.
Yeah, I caught like 3,000 pips selling gold in the early of 2022. Like a 3,000 pip swing trade because I was like,
Wow.
I missed the buys, but I ended up getting back into the sells because like the Feds didn't stop raising rates. I'm still bearish on gold. Keep it going. That's how you catch your swing trades.
Yeah. So going back to the masterclass, because I'm truly interested on this, because we got our social media, and in our social media is made also for people who can provide and share their own experience, their skills. It's not only providing signals and something like that.
Yeah.
I'm curious about the masterclass, and I want to ask you the top 3 of the questions that beginners or people ask to you.
So
The top 3, in your opinion.
the top 3 questions, it's tough because it depends on who you're talking to. Because if they're coming to me and it's strictly about fundamentals, mainly the first question is, how do I apply fundamentals in my trade? Like, there's that. One of the biggest struggles that I see with a lot of traders in general, which is kind of ironic, is when to enter trades, where to place their stop loss, and when to take profit.
Exactly.
Those are the 3 biggest things I see. And whether I send an email list out, like the masterclass is one thing with TopTier, whether it's with my own group, I'd like to think they struggle with it less in my own group because I talk about this all the time. But even if we send emails out or we talk to people on social media, like I talk to a lot of people, and it's always that. When to enter, where to place my stop loss, where to take profit. And when you think about that, it's like that's literally all trading is.
Yes.
You're entering trades, you're placing a stop loss for risk management, and you're taking profit.
Yeah.
If you can't do those 3 things and those are your 3 biggest struggles, you're a really bad trader. Like, you're really struggling. So, I mean, I don't like to say there's an end all be all or like a one answer to everything, but anyone who comes to me and they're like, I have psychological issues.
Yes.
I have issues with emotions. I have issues holding trades. I'll sit here all day and tell you, well, if you understood why you took that trade,
Bro.
you wouldn't
Yeah.
have any of those problems.
Yes.
Yeah.
And
Exactly.
understanding why you're taking trades comes down to fundamentals.
Because you're scared because you don't know what is going to
Exactly.
happen.
You're just guessing because it's the thing that, like, if I enter on this bullish candle, whatever my entry confirm is, I enter buys at this breakout. For all I know, it's a fake out. I shouldn't have taken it. Or maybe there was data coming out in 5 minutes and I don't pay attention to data. So
Yes.
inflation data is about to come out and I just entered buys on the dollar and I shouldn't have done that. Now, every time I see that breakout, I'm going to think it's another fake out every single time.
Exactly.
So the fact that someone isn't paying attention to fundamentals, they would have understood why they lost.
Yeah.
Instead, they're just looking at the technical breakout every single time, and they're just
Yeah, it's true. For example, I used to trade with Elliott waves, and normally I notice just quick. I don't want to go too much deep. I noticed that when sometimes I don't know. I used to trade on hourly time frame. When I have the 4th wave, which is a corrective wave, normally it's because the market is waiting for a big reveal or big news or big data. So the 4th hand, when the data is released for a new impulse, and this one could lead with the news, it match. So it's something that you can apply, guys, also to technicals without problem. And this could help you on the technical side and also on the emotional side.
100%.
Absolutely.
Yeah. Beautiful. I think that's the first time that we've actually spoken to someone who's so heavily in technicals,
Fundamentals.
That's
okay.
in fundamentals, and we really appreciate having you on.
Yeah,
Yes.
man.
Nice
I
to meet
appreciate
you.
it, man. I can geek out on it. So.
Yeah, perfect. So, guys, see you on the next